Here's a TradingView PineScript for backtesting the strategy of buying stocks at 52-week lows. Does it work? The results might surprise you. So before we start, this isn't investment advice, so do your own research, etc, etc. So I put a link to the script in the description. There's also a backup link in case TradingView delete my account. So although the script is a longer term script, you should use it on the daily chart. It seems to work better on the daily chart. There are a couple of variables to change at the top. The first is the percentage return. By default I've set that to 25%. And how long we should hold the stock for, looking for profit. So the default is 365 days. So what is the strategy? We need to buy a stock at a 52-week low. We will hold for a 25% profit. If there's no profit after 1 year, then we'll aim to sell for break even. And after that, well, we'll try and sell and recover some money. So once we've sold the stock, we'll look for something else that's put in a 52-week low. So does it actually work? Here's the results of my backtesting bot in actions. So it buys stocks at 52-week lows and then sells them once it reaches 25% profit. So starting in 2011 all the way to 2024, you can see it has comfortably outperformed both the FTSE 100 and the FTSE 250. I should mention that this is just buying UK stocks. I should point out that I have excluded dividends from these calculations, so both the FTSE 100 and the FTSE 250 would pay dividends, so total return would be higher. However, my bot largely buys dividend stocks too, so it would also return some dividends. So this is an intriguing strategy. Later in the video, I'll show the results with the US markets. So I've done a lot of research into buying 52-week lows, and this is what I've found so far. So it's better to buy stocks or ETFs in a very long-term uptrend. It's best to pick stocks with low debt, rising dividends, and of course rising sales. It works extremely well with the so-called dividend kings or dividend aristocrats. These are the stocks that have increased their dividends over many years and in some cases decades. And fundamental analysis is critical for this, so you really need to screen the stocks before you buy them. So there are a few stocks where it's best to avoid. So anything coming off of a bubble, penny stocks, small cap pharma, where there's like a binary outcome. It can either go to the moon or crash to near zero. Crypto, I don't really know much about that, whether it'll work on that. And stocks in a long-term decline. So there are a few things I really like about this strategy. First of all, it's really easy to find 52-week lows with free screening tools. For example, there's a 52-week low screener on Market Beat, and I really like this one. You can set it to different markets, different market cap sizes, and also different sectors. So at the time of writing, it was a pretty bad week on the markets, and there are an awful lot of 52-week lows. So see Devon Energy, Johnson & Johnson. We're really spoiled this week. Shell. Lots of energies, even UPS. So it has been a very good week for new 52-week lows. You can also go here. This is a website that I built myself. This is called etfsectordata.com, and I put a link in the description. So if you scroll down on the home page, then there's a list of 52-week lows. So at the time of recording, we had a really big pullback in indexes, so there's quite a lot of new 52-week lows. I really like the ETF for France. That could work very well. I'd be wary of some of these like solar energy, steel especially. So ETFs can be interesting with this technique. More on those later. So another thing I like is that you can automate the selling using limit sell orders. So I buy my stocks manually, but then the selling is automated. That means I don't really have to look at my portfolio or even interfere with it. It can pretty much run itself once I bought stocks. So it is really low maintenance. And it's a tried and tested strategy. It definitely works. It has been extensively tested over decades. is pretty much forgotten about. People are using flashy AI and other techniques these days, and they really have forgotten about this strategy. If you're interested in a strategy, then I'm basically following something covered in the 52-week low formula by Luke L. Wiley, and it's a kind of interesting book, and my script is pretty much similar to what he does in this book. So are there any disadvantages to this strategy? Sometimes there aren't any 52-week lows. A couple of weeks ago, I was really struggling to find any at all. Also, there can be very strange times after a severe drop in markets. For example, in 2021, there weren't really any 52-week lows at all. And you can get stuck in a stock if it goes down or sideways for a while and just refuses to go up. And obviously, we're seeking a fixed 25% profit here. So if the stock goes to 24% and then plunges, then obviously we don't make any money. So that is the problem if you're looking for a fixed percentage profit. And if you're buying stocks at 52-week lows, then this is definitely a contrarian strategy. These stocks are generally hated on. Everybody is avoiding them, and people will downvote you if you post on a forum that you're buying these types of stocks. So you really do have to ignore everybody and all the bad headlines. So how could we improve the strategy? A lower target profit can equal a higher overall CAGR. That's the compound annual growth rate. So by seeking a lower profit, you will actually make more money. So after a lot of backtesting, I think an 8 to 10% bounce seems to be the most optimum. Also, a trailing stop loss could work well with this strategy. I'll cover optimization in some future videos. So on to results. So I've shown this before. This is the UK market performance. Incidentally, it did get off to quite a bad start. So the beginning of 2011 wasn't terribly good, but then after that, it did have a steady, pretty decent performance. 2020 was pretty brutal, but it did have a strong recovery. And interestingly, it wasn't really affected too much by the downturns in 2022-23. It's actually been quite a good time to be buying 52-week lows. There have been some massive profits, as you can see. So on to US markets, and these are the results from buying US stocks. So initially it plodded along, and then it really started motoring. When was that? 2015 had a bit of a major downturn here, but 2016 onwards it had a very strong performance. So it's keeping up with the Nasdaq. What's interesting is that although we didn't do too well in 2020, we did seem to avoid the worst of the downturn in 2022 and posted a pretty decent performance. And even though we did fall back a couple of times, the V-shaped recoveries were really swift. I have been testing it with real money, and the results are kind of mixed. It did start off very strongly, and then in December 2024 we had some severe pullbacks, so it's not been doing quite so well, but it kind of is performing in line with the indexes. So this strategy works extremely well on quality ETFs. So let's look at a couple. So this is VU. This is the Vanguard S&P 500 ETF. So as we can see in this strategy tester here, we've had 4 trades and we've had 100% profitability. Each one has been profitable. And the average trade profit was 26%. So the script starts in 2010, I think. So the first 52-week low was here. That's in early 2016, and just over a year later we got out for a profit there. And then there was a downturn. December 2018 the market started puking, so yeah, there was a nice little profit there. Of course 2020, that was another one. That was a great time to be buying 52-week lows if you were quick. And more recently, 2022, there was another one here, and that would have been profitable. So let's look at Elevance Health. So this stock's been in a very long-term uptrend, and the first one at mid-2012, we would have had a good trade here. And it's quite a short trade here, November. So only a couple of months we would have made our 25% profit there. Again in 2020 and in 2023 there was a good opportunity here. So this stock has actually been putting in new 52-week lows at the moment. I'm currently in this stock, so hoping it will bounce back. CWCO, this is one of the best ones I've found. So this is consolidated water, and we had 7 trades, almost all profitable. So average return 21%. So it does seem to work quite well with a stock that is in a very, very long term, like sideways motion. So from 2010 to 2020, it was largely going sideways, although generally upwards. So we have had a great deal of good trades from this one. UPS is similar. We had 3 trades and they've all been profitable. So started here, this was a good one. This one was break even. 2020 again was a really nice 52-week low. Mining companies seem to be pretty good. Let's look at Rio. So mining company stock prices can be quite volatile. As you can see, we had 2 really nice trades in a row there. Then we got stuck for a little while. And again, there was 2 more. So mining stocks can be quite good for swing trading. Here's a couple that haven't worked quite so well. So TNK, let's look at this one. So this one we would have gone long in May 2011. And then it plunged, making more 52-week lows. And then it kind of went sideways for years and years. So we probably haven't ever broken even on this one. I think we did, but it would have taken over a decade. So we've had a lost decade on this stock. So certain industries are really not very good for doing this kind of investment strategy. Also be wary of stocks that are in very long-term declines. Let's look at Western Union as an example. So we would have had a couple of good trades from, when was that, 2018 to 2019. That was a nice profit. But really the stock is in kind of terminal decline really. So I'll quickly run through the script itself. So you need to put it into the Pine editor, and you can change the percentage profit here, and you can change the number of days that it holds the stock for while it's awaiting a profit. So the default here is 365 days, but shorter can work very well as well. You can also change the start date and the end date. So if you want to backtest further in the past, then you can. If you do have any suggestions about how to improve the script, then do let me know in the comments. I'll try and do some variations of it as well. So again, if you want the script, there's a link in the description. I hope you found this video useful. Thanks for watching.